All right, so first things first, good morning, October 3rd. I appreciate you guys being here. I appreciate all of you guys who have sent me emails and messages and pictures, and I'm more than happy to go through any pictures that you guys have that you put into the market, or put into the chat room. One of the things that is probably one of the more beneficial things that we do is we give you feedback on your trades. And it's I don't want to just look at random trades. I want you guys to be able to when you mark a trade. There's a couple of things. First things first, I'm going to go to the user guide. And for those of you guys who haven't seen it yet, we kind of freshened it up a little bit. The information isn't any different, but looks a little bit cleaner. It's a little more well organized for all of the new users to be able to hang out in this first section on the left hand side. Number one, how to join our Discord community, the app, the link to get you in, and then the second section goes through an indicator introduction. And again, this is not different than the other user guide that we have, but it's just laid out a little bit cleaner. We put one of the very first things for those of you guys who are new in the user guide is how to mess around with your NinjaTrader. NinjaTrader is great, obviously, for what we do and for day trading and everything else. But if you don't know how to use it or understand the basics of it at first, this video is going to help you out. And then we work our way into trend and direction. It's so vital that you understand where the market's going, when it's not going to go, why it's going to go, why it shouldn't go. And there's a lot of chart reading that you guys are going to be doing. Bear with me 2 seconds. All right. Something in our conversion, it opens in a new window and it doesn't expand up, so I'm going to have to work on that. But short version is if the triggers are going up, we're going long. If the triggers are going down, we're short. And I'm going to go through this moderately quickly. You guys can take your time to read through this. Termination conditions. This is when the market trend is likely to stop. And one of two things happens at a termination spot. We either stop the market and it goes the other way, or eventually a termination spot breaks, and that's when we're going to anticipate that the trend could potentially continue in that same direction. So again, we'll look at lots of live charts and examples of this today. And then ultimately understanding entry opportunities for trend trades. And trend trades are a really good spot for new users to start off because everything is going your way when you have a trend trade. And when you're doing a trend trade, what we're trying to do is we're basically trying to get in at support when the larger charts are telling us it's going to go up, which is based on our trigger lines. So ultimately, when we talk about high probability trades, we talk about trend trade rules, strong triggers, good tops or bottoms from fibs. Make sure you have room to your Fibonacci resistance before you get into a trade, and then buying or selling a pullback. I have two PDFs that we've been going through all week, which I think are very advantageous. And in these PDFs, we talk about three things. The three skills that you need to master, you better master. Chart reading is one of the most important things. And when you spend time, the more time you spend reading your chart and saying we should go up, we should go down, it might stop here. One of the things in our user guide is market replay. And Market replay, and there's a video to it down here at the bottom.
In this
And in this video, I walk you through how to set up market replay, how to download historical data. Once you've got all of your historical data, to be able to go back and actually replay a day. And, there's two ways to replay the day. Okay? Number one, replay it and just watch it. And you're just building repetition, repetition, repetition. The second part of replay is trading replay. So you can do both. You can trade if the market, if you have trade setups and opportunities, you can trade it as if it's live, even though it's not, it's on replay. Or obviously, in the beginning, you just want to see as many repetitions as you can of support hold, resistance hold, support might hold. And again, we'll get into my little PDF here and we'll talk about it. But, the short version is when you look at the market, you have to have an understanding of what might happen. And, again, anytime we get looks, whatever the look is, we have to be able to ascertain whether or not there's a trade setup or not. So, again, when we get to Fibonacci support, remember the two key words that we talked about in this PDF, and I'm going to show them to you here. Again, for those of you guys who are new, the trigger lines are going to be your number one most important thing that you're going to look at first. It's the easiest to see. And just think of it this way. You want your large triggers wide and you want the price bars way below them. Obviously, the small triggers will be down here too. When you're doing a trend trade, this is the look in order to do trend trades. Price bars completely above large triggers going up. Price bars completely down below large triggers going down, and those are your best possible trend trade looks on your larger chart. Everybody okay with that? Everybody who's new? I mean, it's going down or it's going up, and it's quite visual and quite simple. I don't want to belabor the point for too long. Obviously, if the market's going up, we want to buy pullbacks to support, with the hope that the upward momentum is going to make support hold and take us up to the next resistance. That's it. That's the anatomy of a trade, of a trend trade. And the same thing is true if the trigger lines and all of the momentum is going down. We want to sell pullbacks to resistance areas with the anticipation that the downward momentum is going to make resistance hold and take us down to the next Fibonacci support. And this is the same process whether you're trading large charts, small charts, whether you're trading range charts, daily bar charts. I could pull up a daily Tesla chart and we can use this exact same logic. Strong triggers, pull back to support or resistance, and you would be a successful Tesla trader or Microsoft trader or Bitcoin trader or any type of trader. Doesn't really matter. The market doesn't matter. It's the look, the technical analysis look that's going to make the big difference for you. Now, our pro trader obviously is going to generate support and resistance. And, again, I'm not going to go through. You can watch the indicator introduction in the user guide for an explanation of all the lines, so I'm not going to do it here. But again, one of the most important key concepts that there's a lot of key concepts, so I guess I should be careful with how I say it. But the short version is we're watching support and resistance on our charts. And one of the location and momentum are the two key factors for you when you're looking at Fibonacci support or resistance. Okay, if you reach resistance like we did here in the middle, and the triggers are very strong, which is obviously the example here, usually the market will break Fibonacci resistance and turn it into support. If the trigger lines are not strong, meaning And again, when you watch the trigger line video, you'll understand when you start to see the bar, the bottom of the bar below the triggers going up, and the small triggers inside of the large triggers, that's where we start to lose momentum. We're getting to a condition that we call weak triggers. And anytime you have weak triggers at Fibonacci resistance, it has a higher potential to hold. And what we're looking for is, the best tops and the best bottoms that we get is when we retest an area and the triggers are they're even weaker the second time than they were the first time. And that'll end up giving you divergence, this little negative number. But when we're up here, we want to start being very assertive for short trades. And then, look, vice versa, same thing. This is, essentially what you're looking for is a trend trader. You're looking for resistance to hold, and then you're looking for both triggers to be crossed down. And then during this pullback, you're looking for an opportunity to go short to take the market to the downside. Does that make sense? So think of it as fib hold, good top, strong triggers, nothing in the way from your entry area. And that's where we want to end up going short. And when you look at our trading plan, that's essentially our whole trading plan. Good top or bottom. Here's an example of, again, an initial good bottom. This is the live market right here. But I want you to look. This is exactly, literally, the same picture that was in that. It's in the user guide. It's in everything else. Look, when we reach Fibonacci support, we ask ourselves questions. How strong are the triggers? And you can see clearly that the triggers are extremely strong down in this area. Come on. Let me have my circle. And whenever we have an extremely strong down trigger line configuration, the odds are that we'll get a little pullback and then the market will continue to the downside. And then we just repeat this process. When we get to the next fib, we analyze the strength and location of our triggers. If the triggers are very strong to the upside or downside, either way, we're going to anticipate that the support may also break. So you're not looking for long trades still. You're potentially still looking for short trades. Ultimately, when the triggers get below Fibonacci support, it will turn to resistance, in which we will start looking for one more short to get to the next fib. And then now when we talk about trigger line strength and momentum and location, now we're going to talk about down here at the bottom. And clearly, you see how the price bars are completely below the large triggers all the way down? Not until right here do the small triggers and price bars start to get inside of, and maybe even on the wrong side of, the large triggers. That's your warning sign that potentially the momentum is going to come to an end. And when we reach Fibonacci support, which it's not that we won't get to the second support, which we probably will, but when we reach this first support, again, I'm trying not to confuse anybody here. When we reach this first support, we ask ourselves a question. Are the triggers located above, at, or below the Fibonacci line? And if they're not below the blue Fibonacci line, the blue Fibonacci line will probably hold. That's moderately easy, right? Is there any questions about that? It's location and strength of triggers at lines. That's all you're looking for. And as long as you keep that with all of your support and resistances, and again, look, as we trade back up, right, obviously maybe there's one little long trade in there, but it's going to be short-lived. Because look, we have magenta mid-bands, which is resistance. We have Fibonacci resistance here, and in order for us to do, if you took one long trade maybe to get up there, that's fine. But when we hit resistance lines, we have to analyze again where are the triggers located. So if we look at that box up top, where are the trigger lines breaking above that or not? And if the answer is no, then you're not going to do any more long trades because resistance holds. And that's what we call a termination condition, an area where the market is likely to stop. And then that pushes the market back down to basically the better spot as far as okay, the better spot of support. And now look, we have to analyze location of our triggers. So where are the large triggers? Are they above or below support? So at the moment they are above support. So we have support, we have a prior divergence low, we basically have a double bottom. The triggers, the smalls are below the large, so we're not thinking about necessarily long trades at the moment. But this is one of our A plus type looks where this area has a good possibility to hold because of the word location. Whenever the triggers are physically above the triggers, the triggers are physically above the fibs, there's just a really good chance that the market bounces back up. And all that means for you as a new trader is if you hit the blue lines and they're not supposed to break based on your trigger line reading, you just have to wait until they either cross back up from support and then you can start doing long trades, or vice versa, we break support, and then, again, if these triggers remain strong and we break support, then we'll look to go down to the next area. It doesn't look like it's going to happen at the moment, but you never know what can happen. It's the NASDAQ. Give it 10 minutes and it will change, I promise. For those of you guys, I actually pulled up a crude oil workspace today just for fun. And again, look, you can go through the same process on crude oil. I don't know when you guys want to start, but, going back to 5 o'clock in the morning, again, crude hasn't been awesome. This is where, like, let's just say you were starting at 3 o'clock in the morning, okay? We'll just kind of analyze the market. So the market was going up pre-market and overnight, and then 3 o'clock is when the London session opens for crude oil. Everybody knows that, right? You may not, whatever, but 3 a.m. Eastern time is when the London session opens up. So they ran it up a little bit, and then ultimately we had divergence. And we had divergence, and then the market pushed back down, and we had one little pullback to resistance in the middle. And that was it. And then ultimately we got to Fibonacci support, and if you use the location of our triggers, you can see, look, it was very much down. I think everybody can agree with that. The strength of the triggers and everything else was down considerably. The problem is the location wasn't great. So that creates a termination condition. And then the market obviously bounces around a little bit, and support ends up holding eventually when the small triggers are above the large triggers. Still not any easy trades in there early this morning on crude oil. Now this is a significant breakout. When you're watching this live right here, if you're watching crude oil at 4:30 in the morning, you're saying to yourself, hooray, 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 this is the best look I've ever had in my life. And as such, I'm going to start doing long trades. And I don't know what happened, whether it pulled back and gave it long and then gave an exit or whatever else, but ultimately it didn't go forward. They took it down. Resistance holds again. Small triggers get back above the large triggers, and we have divergence, which will usually start an upward trend. And then you can see the upward trend was pretty significant. Obviously, there's a couple pullbacks in there for some opportunities to the long side. And then we get to Fibonacci resistance, and we ask ourselves the same question about location, location, location. Where are the triggers weak? Are they located above the fib or not? And if they're not, then we anticipate that fib's going to hold initially. And then now we do the same thing in reverse. We look at this fib and we look at the trigger line location and we say, hey, the fibs may hold. So if there's a long trade coming off of the fibs, you're going to get one until we reach our termination condition. And once we have a pivot stop out of a prior divergence high and a termination condition, we can start going short if the trigger lines roll over. I mean, doesn't that look almost identical to this? It's a retest of an area, the triggers roll over, we're going to look to go short. That's right out of the guide, but when you see it in the real world, it looks just like this. We have pivot stop out at termination, triggers roll over, and we can take a short trade. And there may have been a couple dollars available to crude oil traders on a short trade if you were so inclined. Obviously, with strong triggers, we never really had much of a chance of holding any of these supports. And then ultimately, it gave up over here. And this is the spot where, the triggers were on the small triggers on the wrong side, which is always a warning. And then after divergence, usually the market's going back up. And then where does it stop? Lo and behold, Fibonacci resistance with weak triggers and nothing beyond. And then we get the same thing over here. We get support with no triggers below it. So we have a bit of a battle going on between these two areas. Ultimately, support wins with divergence. And then if you were inclined, you had an opportunity to maybe go long a couple times. And then, look, one-to-ones with divergence is a termination for us. So is support without triggers going below. And then right now we're in an upward direction and we have a bit of a pivot stop out. The strength of the triggers suggests what? Probably going to break through and keep going up. So again, this one-to-one and potentially this fib are the next targets to the upside. So if this support holds, we may see more to the upside. There would be no short trades. It would have to be a long trade right here with the anticipation that we might go up or nothing. And as we look at our smaller charts, this is where that spot comes in. I think it looks pretty traditional as far as trend trade looks go. What do you guys think? Again, we're doing it into a pivot stop out, so you have to be careful. Any divergence would take it out. But realistically, you're looking at, the 80 area up to 11, and then ultimately up to about, 33 to 37 if it keeps going. If it makes a second divergence, the party's going to be over. So we'll see what happens. If it makes a divergence, this is where the divergence on the small chart will end the trend because of the pivot stop out on the large chart. So these two things go together. Steve, are you here? We talked about this yesterday in the email I sent to you, right? I think it's Steve, right? So it's the same thing. As long as we don't make divergence, we'll anticipate that the upward trend will take us to our areas. So if it does make divergence, then we can get the hell out, which means you don't even have to have a stop past here. Because if it takes it out and lower triggers with this pivot stop out, it'll be over. So you can really start to tighten. The more it goes up, the more you can tighten your stop. And if you're long from down here, you've already probably hit your first profit target. So anyway, very good stereotypical look for crude oil trend trading. Now, I don't normally trade crude oil. I'm more of a NASDAQ fan, and the reason why is because there's 700 opportunities to make money a day. So, again, for new users, the S&P and the crude oil are going to provide to you, the opportunities to really, really, really be conservative and have enough time to really think through your chart reading and your trade setups before you take trades. If you trade the Nasdaq, you have absolutely no time to think. You have to be on autopilot. It has to be instinctual. Samuel, a pivot stop out. Again, look, I'm going to go to the user guide here. And again, when we get down into FAQs, commonly asked terms, stuff like that, I was hoping that my AI was going to kick in, because whenever you ask a question like that, like, it's supposed to kick my AI in and answer the question for you, Samuel. I don't know why it didn't happen. Let me take a peek. Maybe it's just being slow today, but I want to take a look real quick. Just give me half a second. I'm going to answer everybody's questions. I just want to see, because I know I have it answered in here, and I don't know why it didn't. Alright. Huh. Should have. Yeah, it's on strike. I don't know why, but should have been the answer that kicked in, and it may do it later, but I don't know why it's not actually working. Anyway, I'll have to double check that thing. But pivot stop out stands for, and again, look, let me go into the user guide because I think that's probably the easiest way. A pivot stop out is one of our termination conditions. Whenever the market has the potential to stop. So, again, when you're going through our user guide, right? So we start off with the understanding termination conditions. And I just want you to know where it's at, okay? And a pivot stop out, and again, look, gosh darn it. This is the section right here where it is, divergence, pivot, stop outs. But these pictures, I think I saved these off yesterday, but anyway, let's see. I'm making a bigger picture so I can blow it up. I don't know why my user guide is not. I'm going to have to go back to the old user guide for a second until I do that. But anyway, short version, let me give you a bigger picture. A pivot stop out is when the market makes a pivot low that creates divergence, which is this little negative number. And you don't have to know why or when or where. You just have to know that anytime there's a low, that's a pivot. And what happens is we get to the market retests the pivot. And this happens like all the time. And whenever they retest the pivot, we're going to do the exact same thing we just talked about when we look at our trigger lines. We're going to look at this divergence low, and we're going to ask ourselves two questions. Number one, are the trigger lines below this line? Yes or no? And if the answer is no, then when the price starts to trade back up above that line, we're not going short anymore. And that's really all it means. And again, the weaker the triggers, the farther above the large the small are, the better the Fibonacci support area, the faster we're going to start looking to do long trades from this type of termination area. So again, if you're thinking about doing counter trend trades or going long or going short at tops or bottoms, you want to make sure that you have first a termination condition and very, 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 very weak triggers and located correctly triggers, and then you can get away with some edgy counter trend thinking where you start using white paint bar trades, high volume trades, momentum trades. So that way you're in early because you know it's bottom. So, but the short answer is a pivot stop out is a retest of a higher low that has trigger line configuration that says it's going to fail. Yeah, but you're not trading divergence, Pete. When's the last time you're going to trade divergence? That's not what it's about. The divergence makes the line gets retested, then the triggers are evaluated, and then you can make a trade. So it's not over here where you're looking to trade, you're looking to trade over here. Alright, so we made a divergence on the crude oil chart, like we talked about, but definitely some money to be made in there. Probably should still finish off. If you guys would like, we'll watch the NASDAQ. The NASDAQ for the first, So look, here's live NASDAQ. This is a perfect example of pivot stop out. So there's a couple of them. So look, the first pivot stop out that we see, I couldn't freaking pay for better lessons. Number one, look, this is the edge of Fibs. And there's no triggers going down below it. Yes? Everybody agree? No triggers below the fib. So that's where we can say to ourselves, hey, that's a pretty good look for not going short anymore. When we look at the strength of the trigger lines, that's not really a low that we're going to go long on. It's a don't go short low, if that makes sense. And then they retest the pivot stop out. So this is exactly what we just talked about, right? So they did it again, they retested it, and then you guys assess for me because look, I know how to do it, so I want you guys to make sure you can do it. When you get to this box and this pivot low, give me the condition, strong triggers or weak triggers, and then give me the location. And then you'll be able to say to yourself, yes, this area should hold. No, this area shouldn't hold. And you can see clearly that this one is considerably better for a bottom than over here because these triggers were very wide and down strong, so it's not an easy long. These triggers were super weak at a low, so you want to take a long trade if you get one. Now, for new users, what's the key to a long trade? Both triggers crossed up and some type of support. So without even looking at any other charts, that's your long trade at 19,907. See it? After the termination that's supposed to hold, both triggers roll, you get your first long trade. Now, they made it up to resistance. Did both triggers get past resistance? No. They were strong though, so you're not going short. Now we have another pivot stop out of the low because NASDAQ is rude and they do that sometimes. And then again, look, same thing in reverse. Now obviously we're going up all the way up to resistance. So again, we get a pivot stop out on the low. And as we break through and we start getting pullbacks, you're going to do long trades up until the time you get to, say it out loud with me, resistance that holds with no triggers past it. So that's a top. So we can really do a super fantastic job of defining what's going to be a top and what's not going to be a top. Now, it doesn't always mean you're going to win. But we're really, really, really freaking good at this. And, if you get a top, look right here, this is the opportunity. I'm late on that entry. But that was your first opportunity to go short and see if you can take the market to the downside a little bit. I'm going to get divergence. It's going to take me out, but it'll go again. This is just the best spot right here. This is one where you're going to end up having to do a trade twice. And that happens with the NASDAQ, especially right off the bat in the morning. Sometimes you have to do a trade a few times. Oops. I got my first target and then break even on the other one. Anyway, you see the idea. And, look, we hit support. And we have to ask, again, trading happens on the little chart, but chart reading happens on the big chart. So we hit support. How many triggers are below it? This answers the whole question of whether you should or should not go short again. If there's no triggers below it, that's your profit target. And that's the end of the party. So look, now we're at resistance again, and look at the difference in the triggers. Not that we can't break resistance, but look at the difference in the trigger line configuration right here. It's a much weaker trigger line configuration, so we can go into the top or the pivot stop out, which we just had. See that pivot stop out? We can go into that pivot stop out with the expectation that it has a little better chance of holding. Do you guys see it in real time? I don't know if it's going to hold, but it has a better chance because of what the triggers are doing. What do you think? And this is where I would look to be more assertive with my short trades, with my white paint bar trades and stuff like that. So if I had an opportunity, again, we did have an opportunity. This would be where I would go short right there. And again, how far is it going to go? We'll see. But anyway, that would be my first short opportunity after termination on every chart. Does that make sense? And again, we may not go very far. We may not go past 56. So, 59 to 60 is our first target, but realistically, they'll probably test the lower area because they usually do. We had talked about this the other day. The better the top, the less likely support is to hold. So we're still anticipating more down here, and we'll probably get to here, and then we'll have to make some decisions, which we just did. So, and then for newer users, the easy visual will be when we break through 55, you'll get the opportunity to keep going short. Realistically, this resistance and these large triggers should still hold and take us to the downside. Should. Because of the quality of the top. So we went through this yesterday a little bit. Does everybody understand this? And again, hopefully, what we do is not horrifically difficult. It just takes time and practice. Where are the key areas that are going to hold? When the triggers are strong, you're buying pullbacks. When you get to resistance that doesn't have the triggers, you stop taking long trades. And then ultimately, you get a really good termination condition when you have very weak triggers, fibs, pivot stop outs, all that good stuff. And like I said, there's a chance we're still going to continue going down, because of the video that we talked about yesterday, which was good tops and bottoms video. The better the top, the more likely it is to continue to the downside. Anyway, the NASDAQ in the first 15 minutes is pretty insane. I mean, you have to be so super, super, super good with your trading plan. You just have to. Bear with me here 2 seconds. Bear with me 2 seconds. I need to do something here real quick. Okay, sorry about that. Anyway, Nasdaq insanity. Now look, they're making a run at a breakout. Um, Again, whenever we have divergence and 50-50, it's not a great breakout. Now we're in a situation where we have a great breakout. We've really broken through all the fibs, all the triggers are strong, which we pretty much anticipate we're going to break when the triggers are that strong. We talked about it already. And now, the idea is we're going to make it up to the next Fibonacci resistance. Where, look, we look to find some opportunity. For me, in a strong market, I would do a one bar down type trade. And if I get divergence, I get out. And because you get divergence, it usually is going to go a little bit lower. And then we'll end up with potentially a mid-band trade if they decide they're going to go up from there. But I wouldn't do it on the wrong side of the triggers. It's worth a few ticks to me in a strong trending market to buy a pullback into the triggers with my market flow chart, and it wasn't ready to go yet. So now we're in a situation, NASDAQ wise, where we have divergence, which means we're going to make it down into this window right here. And almost 9 out of 10 times, look, we're going to come down into this window, and then from that window, we're going to push up to the next resistance. So I'm drawing in the future before it happens. Can you guys hear me? Audio? Okay. Just making sure. Man, they may not even make it down to support. Usually they'll come back to where the small triggers are. And then that should, if we're going to make it down into support, it should come from this area right here. If they don't, then you just sit back and watch. There's nothing you can do. All right, let me clean up all my mess here. Everybody okay with this? Can you guys see where the market has the potential to hold? Now, I don't know if it will hold here. That's not what I'm saying. It's just when we get to this spot, look at the location of my triggers. My triggers are so far above that Fibonacci support, it makes it about an 80% chance of, something over here holding and then taking us to the upside. So there's your support. And now if the market does what it normally does, it's going to take the hell off and run all the way up to resistance. We'll see. Time will tell. Again, it's not necessarily a long trade yet, right? But we're on notice on this area, and we're waiting for some type of a signal. So look, we're not going to jump in long when everything still says down. Everybody okay with that? All we're doing right now is saying, look, we got a good spot. Now we've got a good spot with some divergence, and there's about an 85-90% chance we're going up. So again, this is where, for me, I would take a little bit more of an assertive long trade. We'll find out if it pays off or not. And then I can have a much smaller stop because, again, I'm trading using the market flow chart. Oh man, that's rude. I have to do that trade twice. And then ultimately we had talked about making it up to resistances. So again, that was a little bit rude and I had to do that trade twice, but anyway, it's doing what it's supposed to do. It's very volatile first thing in the morning. Really, really tough. The first hour or so. So there's an up bar so I can reduce my risk. And then ultimately we should keep going. I need to watch my other charts for management. If I get a lower divergence or something. That was it. That was the end of it. Anyway. We'll do more trading later, guys. I just wanted to give you guys a first little, and again, that's not an easy trend trade. That's a trading from the edge, right? So if you're a trend trader, you're like, what the fuck is he doing? That's not right. And it's okay. From these areas, look, this is why you have the areas and you have assertive entries on a trading plan, because if they go all the way, you make 900 bucks. And if you lose, you end up losing about 150. So anyway, they wanted to come back down one more time and test the area. Now we're not going to go long with any type of strong triggers to the downside. Let me ask you a question. Are all the triggers past the fibs, yes or no? That's the first question you ask. Are they all past the fibs, yes or no? Not yet. So short trades are going to be a little bit more difficult at the moment. Not saying that they can't work, but usually you'll start to see, you can see it on your small charts too. We had an extra fib that caught the overrun. Now we have a higher divergence, which traditionally is going to end the trend. So this is a very traditional NASDAQ thing to do, which is to, and this is where I would also do one more trade as a momentum style trade and see if I can get the rest of it. And if not, then we're going to be looking at a second attempt that fails. There we go. And obviously, we can take one of them off at 200 plus bucks. Never hurt anybody. And again, look, notice the bottom was a little more well defined on this chart. So again, what I'm looking for is another up bar, and then I can trail my stop. And then whatever happens, happens. And if they get me, it's okay. We'll end up, we'll have to ask ourselves a question. Do we want to stay in a trade after, you can say it out loud if you know it, a divergence pivot stop out? No. We take half of them off. Are the triggers past this? No. So again, look, they're going to come down a little bit lower. They'll probably still go up because the triggers are up. We'll probably still make it to the Fibonacci resistance eventually because we normally do. So we'll find out. Now you can see, look, we've got divergence. They're starting to warm up to the idea of holding support again, which is not a big surprise. When these small triggers get back above the large triggers, we get to try it a second time. All right, large chart analysis, guys. Number one most important thing. Fibs, where are my triggers? Are my triggers completely above the fibs? 100% above. So this is a really, 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 really A-plus look for the market to stop, which means we want to be more assertive on the entries with, or I do, anyway. Ooh, shit, I got a bad fill. That was a horrible fill. Oh, my goodness. That was just bad. Anyway. Alright. I may or may not win now. It has to go right now if it's going to go, so we'll find out in 2 seconds. We need a higher divergence here, which will finish the move off. Again, I like to be a little bit more assertive at the edges. I had to fade a little bit of heat on this one. My read is still the same, that we should eventually take it up and get to the next Fibonacci resistance. Lower divergence is usually a really bad sign for your long trades. And now I'd probably wait for a trend trade. I mean, look, I've taken a shot or two at the bottom, which I love doing. I mean, look, I love this trade saying, hey, I'm going to go long. It ought to go up to here. Look, the benefit is $1,000, and if I lose it, the downside is they're not going to allow anybody to have that money right now, are they? They're not going to allow anybody to have it. The downside is you lose a couple $100, and I'm okay losing a couple $100. You can see this is why most people don't trade the first 15, 20 minutes in the NASDAQ, because they just, there's a professional day trading term for this. It's called dicking around and ruining everybody's day. And then what happens is you take a stab or two at your assertive trades to go long, which, again, look, it fit my plan to go twice. It's no big deal. Still fits my plan to go again if it happens, but you're going to see this area eventually hold. We're going to get through everything that is going to be trouble for us, right? So you can see where we've got some trouble, one-to-ones and things of that nature. So as soon as they work their way through 94.50, which ought to be any second, you'll start to see that we'll get our move to the upside that we were looking for. And again, this is where I will also do another momentum long trade attempt. I know it seems a little bit crazy. They haven't worked out real well yet, but usually this is the one now that we've cleared, we end up getting the move that we want. With a pivot stop out on the big chart, I'd still probably go to break even and not lose any money. I would like to see a little bit more out of this one, obviously. Ooh, they're not being super easy. All right, new stop, new pivot. Man, just rude. All right. Divergence with my triggers down. I'll go ahead and just lock in $400. We can always get back in again if we want. So look, I would wait for a close above the trigger lines to get the rest of the move. See how I put a stop right here? I don't know if it's going to go up and finish the rest of the move up, but I would have at least an up bar to help me out. And then if the market's really nice about it, we'll get back to prior highs. I can take a little money, and then I can get to break even, and then it can't really hurt me at this point. Everybody okay with that? So we took, a couple stabs at this thing, obviously. So one of them was right here with momentum. And then the second one was with a bar closing up, which I took half off, and then as long as, there we go. Now we get to the target, and then, again, look, the big chart told us a long time ago that this was going to happen. All right, so again, look, I want to go back to the big chart reading because this is where it's really, really, really important. Again, look, oops, sorry about that. I was more assertive from this yellow box. And I hope this is a helpful lesson, just kind of seeing it live. I know it's freaking lightning quick, and if you're brand new, you're like, what the hell, man? How the hell am I going to do this? Trust me, S&P, crude oil is the same read and the same logic. It's just a lot slower. But you can see, support holds, triggers are down, support holds, triggers were strong. Support holds, the triggers in this instance were perfect for going long. And a lot of times I'll be assertive and get in closer to 83 and just hope for the best. But and then you can see, obviously, once everything rolled, we're going long. Once we got to resistance, I want you guys to answer the question. Quality and strength of the trigger lines at resistance. Did I even have to get out? Probably not. And then now look, I want you to do the same read. Quick. Trigger lines and fibs. Are they weak? Are they not above it? It has a chance to hold. that's a better profit target for the second one, but that's okay. It's really, I want you guys to understand this. Nasdaq is hard as hell to trade. Everybody agree who trades the Nasdaq? I mean, it's so fast that you have to be so good with your trading plan and so good with your executions and so good with your management rules, and you don't have time to think. You literally have zero time to think in the Nasdaq sometimes, and you have to just. I use the analogy. Has anybody ever taught their kid to drive? When they were first driving 15 learner's permit, and you said, "All right, let's get on the freeway for the first time," and you're telling them, "Okay, we need you to look over your left shoulder." Obviously, if you're in the States, if you're in the UK, maybe your right shoulder, but that would be weird. Anyway, long story short, you look over your left shoulder, you look back at the traffic, and you see how fast are they going, who's going faster, who's going slower, where's the hole that you're going to stick your car into. And you have to merge into the traffic and get up to the right speed and all that kind of good stuff. And reading charts and fibs and triggers is the exact same thing. You're watching the traffic to say, when are things favorable for me in order to say, hey, support's going to hold. I need to start being more assertive. Or do I need to slow down a bit and wait a second? Because all of this was below the large triggers going down. So we can say, hey, we want to get on the freeway, but we got to slow down for just a second because we're jumping in front of a semi-trailer and we're going to get killed. And then ultimately, look, the semi-trailer goes by and we get the opportunity for everything to line up, and then we get good stuff. And then, instantly you have to read your fibs and say, what's going to happen? And then instantly, that's why I was like, quick, read it. And you can see it's supposed to hold. And so far, it held. This is supposed to break. You never know if it will or not. And then this is supposed to hold. It's not difficult. It's not rocket science, guys. And the other thing, obviously we do have news at 10, so it could go batshit crazy here in just a second. But, look, this is not rocket science. It's wait for a fib that's supposed to hold. I mean, that was so fast. Whenever we have news, it goes insane. So NASDAQ is like extra insane. But look, this is what I did on Market Replay. I said to myself, up, and nothing but up. And I'll just sit and watch it. And I'll say, okay, fibs are supposed to hold. For now. Can change. But somewhere in here, the fibs are supposed to hold. And then I will change my mind if and when the triggers get past it. So look, we have strong triggers in the fibs, but they're not below it, so it still may hold. And then now we've got kind of a 50-50 look. Let's bring in some other charts, help us out here. So we have basically a pullback into support for potentially a trend trade long. It's not the strongest look over here on this chart. So without the strongest look, you'd have to manage with divergence probably. You have to be an auctioneer to try to call the NASDAQ during news. So this is why it's hands off the damn computer until the news shakes out for a few minutes. All right. Anyway, it says we're going up temporarily, but not super great because we've got issues. So let me go back and review a couple of your charts. First of all, let me ask, does anybody have questions? Is there anything that you guys have heard that you would like me to review? Let's just time out everything for a second. And I'm going to go back and I'm going to look at your pictures. So Jonathan, you had long trades with everything going up and you made some money. And then you had a short trade with everything going down and you made some money. So nice job with that. However, what rule can I use for an entry would be helpful here? Okay, I have the answer to your question, Jonathan. Whenever you expect the market to continue up, but you don't have a good reason to get in, number one, you don't have to get in. But number two, yeah, put your question in, Adriana. Number two, look, in our user guide, which let me pull it up for you. I'll show you the picture. Mm-mm-mm. Under additional trade entry techniques, it's called the continuation entry. Jonathan, let's see if I find that damn picture. Okay, so this is the picture right here. A continuation style entry. And basically it says, hey, I think we're going to keep going up. Essentially, you just buy a pullback to your small triggers after they roll over. Okay? I mean, that's it. Entry at your small triggers after they roll over. So that's pretty much the answer to your question on your picture, which is how can I get back in on my big chart? And once the small triggers roll back up, that's the answer. Now, you're doing it in, there's not a lot of room there to make a lot of money, but that was the answer. Let me keep going here with your pictures. All right. Cheetah, you had a question. Would I say this is a strong bottom? No. I would. So, there's a couple of things over here, Cheetah. I put this picture in here earlier this morning, believe it or not, for that exact spot. I don't know if you saw it or not. But look, here's the picture for your question. If the triggers are very weak on the large chart, then any type of divergence or pivot stop out on your small chart will end the trend. So, Cheetah, does that answer your question? I know I sent that to you too, but whenever you have this very weak trigger line configuration, the pivot stop out and termination conditions on the small chart will stop the market. So that's the answer to your question. All right, let me go on and get caught up here with other stuff that you guys posted in. Jen, I got yours. Hang on. All right, Jen, you had a short. That's basically the short I did. You put in a bigger stop, so you stay out of the way, and then you got out at support. Awesome. Beautifully done. I might point out one difference for you guys on the NASDAQ. I'm going to point it out. Use it. I mean, don't use it, whatever you want. But notice that this bar right here was the very first bar that closed below the small triggers on the 13.2. Anyway, and again, I don't mind trading at areas. Nothing wrong with that, so I'm not digging it. I think it's fine. But this bar was the first one that really closed below the small triggers, which made it a little bit easier. Which I had to do that trade twice, so it is what it is. PFI. Let me see what you're up to. So you went long and you made $65 and then $325, and then you went long and made $130. Net $1,000. Nicely done. So you went long here and lost 220. Sorry, I missed that. Those damn divergences, huh? I mean, they just have a tendency to make it go lower first. Fortunately, you got back in. Obviously, you got back in, you took some, you bought it back, you got the other one and the second one. So, really nice job with that PFI. Congratulations. Steve, let's take a look at yours. All right, so let's see what you got. I was just getting a setup to trade, missed a long trade. Please comment on a potential setup. I mean, there is a potential setup, but it's down here at support with your large trigger, Steve, not up here. And it's a difficult one to do because you have divergence from fibs and one to ones, and it's just not the easiest one to do. And then notice if you were going to buy down here, the same thing I just posted in that other picture for Jen. Just take a look at the logic here where, and I posted the picture in again. Look at once we start closing above the small triggers, this is the first spot where you get the opportunity to go long probably a little more safely over here. And then ultimately, you get to fibs with weak triggers, and that's the end of the party. You did try to, you went short, kind of jumping in and getting out at fibs, and then you went long. And again, going long into that, again, very tight management, which is the right thing to do for sure. So this was your short, which I'm okay with. Out at the right spot, nothing wrong with that. And then ultimately your third one was your long trade from support with the small triggers rolling up, which is what I just told Jonathan about the continuation style entry from an area that's supposed to hold. Now, again, the idea of mid-band should hold is a really, really good concept. But you have to be comfortable in your skin to say, hey, it's really supposed to hold, so I'm going to do the more assertive entries. And a lot of people are not really good at the assertive entries. Some are, some are not. Morgan, let me see what you got. You were long with everything going your way, and you forgot to get... Do you see how this is way over here? This means that one of two things. You either traded during news or your timestamps were off a little bit. What you guys need to do after you clean out your data in the morning is go down and sync your clock. Because then you'll sync your data feed time, and then your little markers will be at the right spot on the right bar. So even if you got out here, it's this millisecond in between that makes them plot over here instead of at the right spot, just because the timestamps from your clock on your computer and the data feed are off, if that makes any sense. Anyway, that's why they posted a different spot. Anyway, just not that big of a deal, but I always sync my time in the morning as well, so everything's synced up really nice. All right, Cheetah. We went through this one. Gary, let me take a peek. I already know what your trade is. Everything was going up. You went long. You made a ton of money. Congratulations. Absolutely nothing to say about that other than you rock. And PFI, you just passed your first evaluation on that one. Good. Haji, let's see what you're up to. All right, Haji. I really look, Haji. This is the best chart that has been posted today, and I'm going to tell you why. It's not because you lost money and it really looks horrible. It's because you had the balls, or or maybe if you're a girl, the ovaries, whatever. You have the right anatomy to go in and say, hey, I lost. What the hell did I do wrong? And this is the best thing that we do as a company. So first things first, we have to look at trigger line strength and direction. So I'm going to just label it for you. And again, you were thinking that you had a good bottom, which you actually technically did have a good bottom. So it's not that the bottom was wrong. Okay, you just have very wide open triggers to the downside. And here's the other thing. If you didn't have support here, Haji, so let's say there was no Fibonacci support here and you had these triggers, this would be your trend trade short look. This is a trend trade short look. Mid-band, both triggers going down, it's red, everything is going down, and you went long. So you literally went long into resistance with all of the trigger lines going down. And that's why you lost. It's just too early. Does that make sense? So you were thinking the bottom was in, and I think it's 100% good idea to try to be assertive, but you need a weak trigger to be assertive. So this is the little piece that you were missing right here. Weak trigger at the low to be assertive on longs. And you see how it wasn't weak, it was strong, and that's what ended up ruining the party for you. I wrote a book. You guys saw my book, right? And it's a joke, but it's very, very consistent. And every time I break it out, it's obvious. I mean, it's so obvious when somebody points it out to you. It's almost embarrassing. And I've done it. You've done it. But how to commit financial suicide in one easy step: trade against strong triggers going the other way. It's almost guaranteed to ruin your day. And anyway, this is a perfect example of strong triggers going down and you're trading against it. And it is truly, it's not only financial suicide, it's confidence breakers, and you think you're doing wrong and you were hoping to do. And, you know, we spent a lot of time at this area, obviously. And eventually it did work when the triggers were weak. So hopefully that helps you with your thought process at the tops and bottoms, making sure you have those weak triggers first. But thank you for posting that loser, because that is the most important thing on God's green earth you can do with us. All right, so we might have missed a smidge of action. Look, you can't. I mean, it's so easy to read once you spend enough time with it. Obviously, I've got a couple years under my belt, so it's very easy for me to read. We have resistance, it breaks, and all of the trigger lines are above it, so you get the opportunity for some type of long trade. And then ultimately, we have a weak trigger with divergence, which means almost 99 times out of 100, we're going to come back to support in the mid-band, and then we're going to go back up again, right? I mean, almost always. It's freaking damn near guaranteed. Now, what happens next is, again, hopefully this is the chart reading aspect of what we're doing today is very, very helpful for everybody. Look, we retest the high. And when we retest the high, I want you guys to tell me the condition of the trigger lines at that high. It's pretty significantly down, right? So when we get a second divergence that's lower and our trigger line configuration is down, we can start saying to ourselves, we've got a pretty good top end. And then ultimately, as we get to support, and the triggers start to get beyond the support, hopefully somebody took a short trade. This is like the premier, perfect, I love that short trade. And then look, if you went short, there was a couple dollars to be had if you were so inclined. And you don't have to worry about going long until something holds. So eventually, blue Fibonacci support holds, with strong triggers. And if everything rolls up after that, you can have an opportunity to go long on a pullback if you get it. So, again, you may not want to go long assertively after that much of a down run, which is fine. Hopefully, you were short several times. There's 2 or 3 spots where I see we had pullbacks. So there was opportunities to get short until we got to here. And then when we get to fibs, you stop going short if the triggers don't get below it. Everybody okay with that? Pretty simple. And if everything rolls up, you can try to take a long trade until you get to some resistance that holds, that has a weak trigger. This is like every lesson on the planet all in one day. So this is going to be a really good video to go back and watch for chart reading. And then look, we get our classic 50-50 look. I say classic. 50-50. Let me show you the picture for the 50-50. But the 50-50 doesn't mean you can or can't trade. So it's a look on the large chart. 50-50 look is not odds. It's 50% of the triggers are above the area. 50% of the triggers are below the area. Does everybody understand that? So we have an area in question, and then we've got 50% below, 50% above. And you can take a trade with a 50-50 if there is no divergence. If you get divergence on your small chart, 50-50 is over. And then ultimately, it's the same thing over here. We get a 50-50 look, and so look, this in the live market, or at least 3 minutes ago, was a 50-50 look. Everybody give me a yes or no, you understand this. 50-50 look, half the trigs above, half below. And so what we have to do is at this spot, which you can't see on this chart, we have to ask ourselves, what the hell happened on the small chart right here? Did we have divergence? If we did, it's over. Did we have one-to-ones? If it did, it's over. So that's the spot on the small chart we have to analyze and say, at 50-50, what happened? So look, I'm just going to bring up the small chart and you guys can tell me. So we had a 50-50 and we had divergence. Everybody agree? See the negative number? And traditionally, you're not going to do trend trade shorts with a 50-50 after divergence. If you were so inclined and compelled, I would be okay if you took a shot at it. But in true 50-50 fashion, they did the same thing that they do most of the time, which is they came down some, but this is the ultimate exit for our purposes. And traditionally, that's going to end up killing the 50-50 and making the whole thing go back up again. Adriana, if you want to wait 2 seconds, I'm getting to it. Hang on a second. Let me get to your question. Give me 1 second. How do you manage or analyze fibs on the market flow chart? You don't. You don't have to. It's the same fibs as on these charts. So this is where you analyze your fibs, starting with your big chart first, period. That's it. So everything is from your big chart first, and then your second dynamic Renko bar chart second, and then you don't even need to draw fibs on your market flow chart if you didn't want to. But anyway, short version is you don't necessarily need to. You're basically watching trigger lines on your range bar chart. Anyway, and obviously, look, fibs are supposed to hold on the big chart, and that's all you really need to know. So if the fibs are supposed to hold on the big chart, find a short trade on your small chart. Does that make sense? So I wouldn't spend too much time worrying about whether or not, you can still watch them, but the fibs on your other chart should be the same as on this chart. All right. All right, guys, questions, comments, concerns, things you guys want to go through. Notice that we have no good reason to stop the market down here at the low. So because there's no good reason, there's a pretty good chance that we end up going, you know, I have a slight momentum trade that I'd risk a few points on. Oops. And now I wouldn't risk any money on. Oops. Man, I couldn't even get my target down there quick enough. Anyway, hopefully, I mean, that kind of stinks that I wasn't able to move it quick enough. But for me, look, divergence, we're going down. We're going to make it to fibs. This was one of my, I took it, obviously, but I could have made a little bit more money had I actively managed that trade. Just a little better. Adriana, have a great day. $2,455 and leaving. Freaking awesome. Awesome. All right, so for now, more down and nothing but until this 55 area gets taken out, right? So there's a good chance 55 holds, and then we go down to 1930. We'll see if they do or not. We'll find out. I wouldn't be doing any long trades just yet. With the large chart, see how the triggers are not above the fib live, and we might go up. I don't, we may go up to the mid band, and that's fine. But now we've got triggers considerably better for continuation to the upside. Do you see how they didn't quite finish this business to get down here to this fib? A lot of times you'll get divergence and they'll run up to the edge of fibs and then they'll make this last big move to the down. I don't know if they will make a move down or not, but usually they'll stop up here and then go back and get that last fib and then anyway, all right. What do I think about trading off the large chart? It's a horrible idea, PFI. Horrible idea. Now, I'm going to tell you why. I'm going to give you the exact reason why it's a horrible idea. It's one of my favorite pictures. We went through it yesterday. God bless it, America, with my new user guide. Hang on a second. I want a bigger picture of that, so give me 2 seconds here. Bear with me 2 seconds. I've got some of my short links here. Okay. The old user guide. I mean, it's the exact same stuff. The other one is just organized better. That's the only difference. But I know my picture is going to open up big in this one, so that's why I cheated. All right. This is why you can't trade off just the big chart. And I want you to notice this picture is from March of 2021, so it's 3.5 years old, but it's still true to this day. The large chart would have you going long, and then you wouldn't have any way to manage that trade effectively. Does that make sense? So you have to have the small chart in order to manage your trades effectively. Because you have to see the change coming on the small chart to know that the large chart's going to end up failing. Or you have to see that the small chart continues so you know the large chart's going to keep winning. Without the second chart, you are fooked. There's no way to know. And I've tried it. Trust me, I've tried everything. And you get away with it if the market's trending really hard, but if it doesn't follow through, man, you just destroy yourself. So, anyway, don't do it is my answer. Okay, so we have a freaking awesome resistance that's supposed to hold, yes, at 81. Everybody agree with that? 81 is supposed to hold to go to the downside. It's so hurtfully obvious, isn't it? And again, this is where you get back to your mid band and then, your fibs, and they're just rude sometimes in the NASDAQ, but should go down. We're still kind of post the news, so it's a little more volatile than it should be, but we should go down now and finish the move down to this fib, target-wise. That would be my guess. Notice divergence from 1-to-1s. That's almost the battle cry where, I would personally take a shot at it, and if I made divergence to the upside, I would get out of it. Now, I got out of it very quickly. Usually divergence from 1-to-1 ends anything that you want to do. All they did is stop out the high by a tick. I want you guys to read this right now, right here, right now. Quick, quick, quick. Pivot stop out at the edge of fib. Should it hold? Of course it should. So, what does that mean for us? We can be more assertive to try to get down to support. I can't really teach and trade when it's this fast. It's just too damn hard. So I won't. I'll just teach. You guys trade. We'll go from there. All right, Joe, let me see what you got. All right, you pointed an arrow at the mother lode of support with divergence. Awesome. That is a good bottom, unequivocally. Is that what you were asking? Is it a good bottom? I don't know if there's a question in there or just pointing an arrow at how pretty it looks, or I'm not sure exactly what the purpose is, but it's beautiful. That's okay. No big deal. All right, guys. So look, this is the precursor to potentially range-bound markets where resistance should hold and support should hold. And this is where you're going to require some type of a breakout before you get an easy trade setup. Does that make sense? So right now, look, resistance could hold, support could hold, and it's probably going to get sideways and choppy for a little bit until we have a good confirmed breakout, which will happen eventually. It always does. Usually faster than slower in the NASDAQ. So for now, resistance holds. We'll see how they treat support when they get down here. This will be the key spot to hold. If it breaks, we know what to do. If it holds, we know what to do, right? I'm going to take a 2 or 3 minute pause for the cause. Obviously, they answered the question quickly, didn't they? So look, this is where we're going short, guys. Oops. There's my first target. See if we can get all of it. So I already got my first $200 target. And we'll see if they make another down bar here and I can trail my stop. As long as they don't make a second divergence, which they shouldn't. They're rude, so they will sometimes, but man. Alright, new pivot. I'll trail my stop again. A second higher divergence with the triggers up will end the trade, which I got out. So anyway, made a little money. It's still going down, but I've got to go to the bathroom. I had to go ahead and make a little bit, but that's really as good as they get right there for trend trades on what we're looking at on the big chart. See how they broke through with strength, pull back, and then ultimately, look, pivot stop out and or support is going to be the spot where the next decisions are going to be made. Whether it's hold or break or not, we'll find out. It's moving fast. And to be able to teach it and do it and think about it and all that is really hard. I have to say, I'm not complaining. Right? We can do it, and we're still up $400 or $500 right now as it stands, even with my 3 losers I had in there. So, anyway, making money is not a big deal on the NASDAQ, guys. Sitting on your ass and waiting for everything to be perfect is the most important part of what we do. All right. I'm going to leave you be for just 2 minutes. Take a break. I'll be right back. You guys let me know. Post in any questions. Joe, you're up 1,200 bucks. Awesome. I'm going to put a line in the sand here. So I'll be back in 2 seconds. Alrighty, everybody. I'm back. Can you hear me okay? Just want to make sure. Notice, look, we didn't have a super great top up here. Obviously, we had divergence, and then we had a lower divergence, which usually will make it go. Whenever we don't have a great top initially, you can almost bet money that the mid band's going to hold and make it go back up and retest the area. You see what I'm saying? So the top wasn't great, so the mid band usually bounces. And then now we have resistance that has a better chance of holding. We'll find out in a minute. You see what I'm saying? Over here, the resistance had no chance of holding. And then now, trigger line strength and location suggests that if you're going to be more assertive for short trades, that's really the spot right there. Does that make sense? You see it? And that's pretty easy, right? I mean, that's not rocket science. And then ultimately, look, your short trade will hopefully go down to here. And look, if you were waiting for everything to go your way first and not doing the assertive, trades that we teach, which is okay. This is where obviously you're looking for some type of a pullback, which usually you don't get in the NASDAQ. You got to do momentum trades when they're this jumpy. But anyway, look, for me, my momentum trade there was one spot. I mean, obviously, it's a pretty damn good idea that we're going down from up here first. But this is the spot for me where I would do a momentum trade through the mid band with a bar up to go short. And then obviously I drew in a line where the target is. Pretty freaking easy to see. And again, we're not going long. Just because you get to a target, you're taking your profit. And then we're going back to the big chart. Most of the time it's from the range chart, Elvis. Sometimes the 13.2. but most of my trades are initiated from the range chart. So anyway, look, we have fibs, but somebody tell me how strong the trigger lines are. I'm just going to say very. I'll answer it for you. We'll call it rhetorical. Wouldn't you guys agree that these triggers are too damn strong to think that support's going to hold just yet? The locations suggest it might, but that could change in an instant with strong triggers. So we have to just relax for a second. Just wait, because strong triggers have a tendency to break things. So now that we're a little bit weaker, we'll see. We'll see. But we have a little better chance now with a little bit of a weaker trigger. What do you think? See it? And again, this is where, look, do you want to do assertive long trades? The downside of assertive long trades is if they don't stop right there, you lose $100 like I just did, no big deal. And then you wait for a second one. This one fit my rules for a momentum trade on top of the one-to-ones, but that's why I also had my stop very, very tight, because if it got below them, that's it. So they're trying to decide now if they want to do it again or not. And the answer is not yet. So anyway, one and done at the moment until something else changes. And you can see there's a pretty good chance that, well, is it helpful for me calling the market live so you guys can see the analysis? Fibs and the triggers. Should it hold? Yes or no? Should the fibs hold? The answer is yes. So, do we have a short trade that makes a lot of sense? It's not super pretty right here. And again, trading into one-to-ones and one-to-ones that cause divergence is a horrible, detrimental thing to your trading account most of the time. So I say we let them shake out for a second and give us something easy and obvious. Because look, if they don't go down, and they overrun an area, then they end up going back up again. And now we're clearly in a position where, look, I'm buying a pullback with momentum. And if I lose momentum, shit. I couldn't even put my stop there quick enough. That's my perfect momentum trade right there. And then the minute I lose momentum, I want to be out. So you're risking pennies on the dollars to go long. Didn't go, which that's fine. Now we have the same thing in reverse, don't we? We have a trigger line, fib break, strong triggers, and essentially we had momentum to the downside. I can't get it by the time I talk about it, but every momentum trade ends with divergence and a loss of momentum. So you have to be like lightning fast. I mean, you have no time to think and no time to decide. And again, this is where, potentially they're going to stop at resistance and then give us another opportunity for the short trade right there. We'll see if, there's one of them. And there's the other. See how fast that was? I mean, that was I went short right there. And it's so lightning quick. And obviously we got to get out at fibs, because how many triggers are below it? None yet. So we take our money. If it gets below it, we can go short again. Like right there. Too god dang fast to do it. But you can see it, right? I mean, look how easy that was. It broke fibs, pulled back to them, go short, and you are freaking making money hand over fist. And that's why you see people up two, three, four, $5,000 a day, because it's very easy to make $2,000 on two contracts without even blinking on the Nasdaq if you're really, 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 really good at your trading plan. If you're not really good at your trading plan yet, which is totally okay, right? Nobody starts out great at anything. This is where markets like the crude oil market going slowly give you the opportunity. I see we're at $500. We're not up a lot of money yet, but that's okay. Just on sim. I mean, I'm up $1,000 on each of my other accounts right now from this morning. So, um, look, we'll read crude oil, and this you'll have plenty of time in crude oil. So look, divergence from one to ones is a bottom for us. You can take a long trade. A second higher divergence from a one to one is the ultimate, and you should basically be long already in crude oil. If you're not, then a little bit late, but we should get a breakout to the upside is what it looks like. And then ultimately, crude is going to end up at 32 or maybe even considerably higher. We'll find out in a minute. But it's the exact same read. Whew, look at that, man. Crude did have quite a bit of fun. So here's where we were at earlier. We already marked up all the areas on crude that we're supposed to hold. And you can see as it continues up, these were supposed to hold, and then fibs break, momentum trade, and then ultimately, look, divergence, lower divergence, and a third lower divergence means the damn party's over. Once we break below everything, resistance should hold, and you get your short trade. And then you get weak triggers at fibs, which gives you your first push up. And then now we've made bottom, really good bottom with divergence, double, triple, extra good bottom with divergence. And like I said, you should be long crude oil if you're... Did you guys go long crude? I'm hoping somebody went long crude if you're a crude trader. Chili dog. Awesome, Ron. Everything going your way perfect. Little base hit. Do it 4 or 5 times a day, and that's all you need. It's beautiful. I don't like it because I see dead people and too many opportunities before that ever happens. I tried doing this trade. I just can't do it because I'm already in. I'm cool adding on to a position, but I'm usually already in before that happens. Yes, sir. Anyway, does everybody understand the concept of divergence from one to ones being a good bottom? Higher divergence from one to ones making it a super awesome, even more better, best of the best bottom. And then ultimately, you should be long crude. And like I said, we'll probably get to at least 32 and beyond maybe. Anyway, this is a little more peaceful, isn't it? Looking at crude oil than the Nasdaq. The Nasdaq is like smoking meth and playing video games on 10, which I've never done that, but it would seem that way to a new user. I mean, it's just absolute insanity. This is peaceful and easy and slow. It's video games on 2 or 3. Did I say that out loud? I was just trying to be funny. If you have a meth smoking problem, I apologize. Seek help. I didn't mean to offend the meth smokers out there. I don't have political correctness. I don't care. If you've ever seen Dana White in a press conference, that's about how I feel about it. I just, you know what? I don't have all the sensitivities. I was born with half German blood, and I think I'm more pragmatic than I am sensitive. Let's put it that way. Anyway, okay. Back to the freaking NASDAQ, because who the hell doesn't love all this? So let's take a look at what happened. We had divergence from the bottom. Triggers started going up, and we had maybe an opportunity for a long or two if you're so inclined. If you're a proficient chart reader at this point, which I hope to God you're getting better at reading your charts after today. We spent a lot of time on chart reading, chart reading, chart reading. What's supposed to hold, what's not supposed to hold. Obvious that this is supposed to hold, right? Right. All right, Gary, that's a good one. And again, look, we're going to keep going. There's no reason for it not to keep going. We may now see a little retracement after a couple bars down, but again, look, we would expect. Oh shit! I went the wrong way. Damn it! Don't you hate when you go the wrong way? Hit the wrong button. Anyway, we would expect it to go up unless, of course, they make a third freaking divergence. And then ultimately, you're going to have to go long a second time if they make a second divergence. Man, they're not going to give it to anybody, are they? It's just rude. All right. I'm going to have to lose that one and be done with it. All right. So that's the end of the up party for the moment. I'd still say they go up, and they're just being hurtful. They do that sometimes. But they want to go down. This is why you can't trade with just a big chart. You got to have the small chart too. They usually will go down and retest the fibs and the mid bands, and then they start the party over again. So this is very, very typical. And again, you guys can assess this support area. Yes, the triggers are down into it, but eventually, is it going to hold based on the location of the triggers? That's what we have to ask ourselves. And if the answer is yes, look, here's what we're looking for. Right? They came down lower, and then we're going to look for them to do what we call finish the business. So what we want is 76 to hold, give or take. If it does. If it breaks, then we know what to do. But if 76 holds, then we want to trade up to the 2024 area. If it breaks, then, now we know what to do. And, look, sometimes they're rude about it. They'll go down and look like they're going to break. Fib says at the moment it's going to hold, so no long trades, maybe a short trade. No, there's not a short trade. This is the classic overrun look. They break out, they make divergence, they make a second higher divergence. Now our trigger lines roll back to the upside. This is where ultimately I would do a momentum trade from the one-to-ones, trying to get the rest of the money to the upside until we lose momentum. And then ultimately, you don't even have to risk a lot of money on this because, if you get divergence, they're going to come back and get you. So we don't even want to see divergence. So again, look, that's over $200 a contract. That's usually the first profit target. I didn't take it. I have pushed it up a little bit higher. But I will take it if it goes back up again. If not, look, it should go back up. Should. All right, so there's my 200 plus on the first one. I got my stop below a pivot. Now we just sit back and chillax. Let the market do what it does. Everybody okay with this? And again, we're probably going to go higher than 1875, but you know what? Give me $650 on one contract. I'm pretty happy. That's called bingo. And again, could make a little bit more money, a few more points, but whatever. I'm not greedy. I don't have to get it all. All right, everybody cool with this? Really easy momentum trade with, and again, it started with a breakout of resistance. And then once we got the breakout of resistance, we get the momentum to the upside on all charts. And then lo and behold, we get lucky. The market follows through. Everybody cool with that? Now, we obviously make it up into a bunch of fibs and we've got some trouble. Is it going to keep going? I don't know what it's going to do. Who freaking knows? But all I know is that we've got weaker triggers at a trouble spot, which means that we're not going to do any more long trades, even though it's probably still going to go up higher. Well, yes, Elvis, 100%. And Kurt, yeah, it is because I've spent 50 million hours reading my charts. So I'm really freaking good at it, which everybody can be, but it takes time. And again, the good chart reading is one of those things, that it's a skill that you have to have. It's your number one skill. So when we talk about, everything needed to win, the very first picture in this PDF is chart reading. And chart reading is freaking so essential because, look, 90% of your day is going to be chart reading. 10% of your day is going to be trading. And achieving mastery in chart reading encompasses three vital elements. When is the market likely to continue up or down, which is the only time you're supposed to make a trade? Where is the market likely to go, which is your next Fibonacci areas, and that's where your profit targets are? And then ultimately, when is the market likely to stop, which is when you have to quit taking trades? And anything short of really good at chart reading, you end up making mistakes. And again, look, it's like the one Hodge did, not to beat him up, but he went long and his chart reading was wrong. And if you read your charts wrong, you're going to end up doing the wrong trade. And it's not a knock on him. Everybody does it wrong in the beginning. If you knew what you were doing, you wouldn't be sitting here in class trying to figure it out. It's just not the way it works. So, again, only when you get your chart reading down, and that's why I said, look, do market replay. And from the market replay, just replay a whole week's worth of data on your just your big chart. Don't even use the little chart. Just your big chart. And just say up, down, or I don't know. Up, down, I don't know. Up, down, I don't know. So like right now, it's leaning to the downside. Yes, we have divergence. Our triggers are strong. We pulled back to a lot of resistance. So the initial read is down. And, again, the read is it may continue down. I don't know if it will or not. Sometimes it does. Sometimes it doesn't. I can pull my stop down because of my market flow trailing. And then look, if I get a higher divergence, I'm out. I lose 165 bucks. If I don't, then I make 240, 250 on half. I need to keep going here. No reason to really lose after a pivot stop out with divergence. Here, I'll put it up here. We'll keep it out of the way for a second. Nope, that's not going to go. Anyway, there will be a second trade that happens right here. So you get your first trade that happens, and then usually when you close below your triggers the second time, you'll get the big move that you wanted the first time that didn't happen. Okay. Alright, so look, we'll take half at the prior low just for fun, even though I don't think it's going to stop there, and I'll get to break even. Risk a tick. And we'll see if we can get the rest of that. Everybody cool with this? Again, I didn't get out because my small triggers are down with divergence, which means it's usually going to keep going. And there we go. Bingo. So, again, look, when you guys step back And you look at this, does it make sense just looking at the big chart that we were going to be going short come hell or high water? Had to do it twice. And then ultimately we get to fibs, and that's profit target. So we had a long trade from a breakout. We have short trades back to the spot. Now they said, screw that spot. We're not going down. So again, we're going to be looking for the potential of short trades on our other charts if. Let's see what happens. Sorry, I'm moving around a little quickly. All right. Again, at the moment, resistance is slated to hold. We don't have a short trade look on any of our charts. There's no reason to go short here. Unless you're doing a very assertive short trade, which I don't technically. I try not to teach it to you guys too much. But right here, right now, look, if we were going down and I was going to be assertive, that would be my assertive short. And I would definitely not be risking any money at this point. So there's first target, and then ultimately, do we make it to the fibs for the next target? I guess I could leave my stop out of the way just a little bit. All right, so I'm going to lock some in. If we get divergence above a 1-to-1, I'll be out. And if not, we're going to try to make the rest of that money. And bingo, again. So look, I took an assertive short right here because the fibs were supposed to hold and the trigger lines rolled over. Remember that extra trade that we were talking about? I think it was Jonathan that asked the question. When you're at an area that's supposed to hold, and again, this is freaking much further down the additional opportunities, but this last picture that we had talked about, where the hell? This picture. An area that's supposed to hold a pullback to the small triggers that rolls over usually gets you a continuation. We call it a continuation style entry. But this is a really good example of it right here. So, look, having some losers. You guys have seen me do a bunch of losers already today, right? So far, even with the losers, what are we at? We're up $1,700 on 2 contracts. That's not so bad. I mean, that's definitely not taking full advantage of everything that was offered, but you don't have to in order to make a bunch of money. If you can make $1,700 a day, would you be happy on a 2-lot? You can always trade more contracts. But if you can make $1,700 on a 2-lot and do it relatively easy with everything going your way, that's why the NASDAQ is so appealing to people, because when you should learn on the S&P and you should learn on crude oil because they're not insane. But after you get the process down, Van Thorpe, if you look him up, but he had a marble game where, a winning marble, 50-50, winning marble was worth $2 and the losing marble was worth $1. If you had true 50-50 odds and you make $2 for every dollar you lose, it is mathematically, statistically impossible to lose money trading. Would you guys agree with that? If you could just do 50% and win more than you lose, you're going to win. It's mathematically certain. The only way you'll possibly lose is if you trade over leveraged and blow out your account. And that's why the prop trading firms want you to trade 15 contracts, because you're going to blow out. My opinion is on a $250,000 account, you should trade a 2-lot. And then you won't blow out most of the time. If you have a really bad run, maybe. But anyway, long story short, let's do some quick analysis. Mid-band on the big chart. Hold or break? Hold or break? You're seeing it already. It's a little late, but yeah, it's going to hold. So we're going to go down to our support down here at 1930. And everything's crossed over. So look, this is where we end up going short. Maybe not. All right. Well, I tried to do an at the spot trade. They're just going to do it from the fib. So there is your second chance at a short. Maybe it's not a great short. We'll see. I gave up 180 bucks on that. We'll wait for it to be a little bit better. I'm still anticipating this area to hold. And so far, so good. Now my small triggers have rolled over. This is where we get the continuation style entries. I don't know if they're going to even give a pullback to try to get a momentum short. See how I'm trying to sell the mid-band momentum short? Come get me. All right, they got me. Now let's see if they go down and we get the rest of our money. If not, then it's going to be a wishy-washy area and it's going to be over. Ah, dang it. Yep. They're not going to give it up. Oh well. They'll probably give it up anyway, but they'll probably stop everybody out one more time. And this is the thing with the NASDAQ. You get a couple trades in and, you lose a couple $100, you lose a couple $100, and then you make 600 or 700. It's just so typical of the NASDAQ. At the moment, again, look, we made divergence from this area, which is a precursor for, oh shit, I meant to put in a limit order. Anyway, all right. I got it anyway, but I was very, very late. I had a white paint bar down, which is one of my signals right here. And I hit market order, but man, it filled me a lot lower. Fortunately, it did make it to the target that it was supposed to. So we got most of our money back, but they got me a couple times in the beginning. So anyway, typical NASDAQ. Now we get to a fib. I want you guys to analyze. Are the triggers below the fib? Yes or no? Nope. So you don't need to know anything else other than do not freaking go short. It's not a long trade because they're too strong to the downside and it may break. Does that make sense? So they're too strong down to go long, but they're located in the wrong spot to go short. Super easy to see, right? Hopefully. Hey, fibs are cool, huh? I mean, they rock. Morgan, what time is it on your computer clock right now, Morgan? Okay, it is not 8:05, it is 11:05. So I'm going to give you a mechanics lesson. You ready? Um, listen to this real quick, Morgan, and everybody can listen. It's totally cool. Especially on the NASDAQ. Look, it's going to take me a second. I'm going back to midnight. So midnight on my chart is right here. I'm going to draw a line on here, okay? You see that yellow line? That's midnight. Now, our Fibonacci software is nothing more than a calculator, okay? We can all agree to that. It's a calculator. It's a super freaking awesome calculator that does millions of calculations, but in the end, it's a calculator, and it's going to measure it. It has a force feature, if you will, to update fibs at midnight, and then every however many minutes, so I've got it set to 120, so every 2 hours it'll update fibs. So what that means, Morgan, is that my fibs are looking at 10 days back worth of data from midnight and then projecting out fibs in the future. And then 2 hours later, it'll do it again. It'll go back 10 days and do it from 2 o'clock. And what happens is because mine calculates from here and then from here, yours didn't actually do the midnight calculation until over here. So until you got to right here, so you have all of this extra data into your calculations that I don't have because your midnight is different than my midnight. Does that make sense? So you're feeding in 9 times 9.6 and you're not going to get 81. You're going to get something slightly different. I've got 9 times 9 and I get 81. You've got 9 times 9.6 because you have different data that you're using in your 2-hour window calculations. So in order to match up with the chat room runner, which we're on East Coast time, you have to change your computer clock to Eastern time. Look at the timestamp down here. It's 11:08. And then when you delete your data, sync your clock, after you've changed your clock, and then bring it back up again, you'll match me perfect to the tick. So, but that's why you have a discrepancy. It does matter. I mean, it's up to you. If you want different fibs from different times, then that's totally cool. I mean, I have some Italians that are in Italy, and they just run their local time and say, I'll just trade whatever it is. I don't give a shit. I'll trade my charts. I won't worry about what Novak's doing. It's not wrong. There's never the fibs that you have are not wrong. They're just calculated from a different spot. So that's why you'll see discrepancies sometimes, and less so on the bigger time frames, more so on the smaller time frames because there's more swings. So let me give you one more picture just to give you a visual of what's going on in the background, okay? When we do tens of thousands of fib calculations, each one of these individual lines is a Fibonacci projection, alternate, expansion, retracement from not only the original time frame but the synthetic time frames that we build. So this is what it looks like under the hood before we sort them out and rank them and make them red and blue lines. I don't know about you, but that's a lot of lines. And it's doing a lot of work. And again, if you're missing 4, 5, or 6 of these little lines because you're doing it from a different time, then you're going to end up with different red and blue lines when it does its filtering. So I personally would run it East Coast time and be done with it. But I'm in Florida. It makes it easier. Yeah, no worries. Okay. And that could just be a little data discrepancy or whatever, but anyway. So look, now we've moved into the fib resistance and support might hold look, which is not the most favorable for doing any type of trade. See how the fib support ought to hold based on where the trigger lines are? So the resistance should have bounced, but the triggers are strong up. Now we got the support. It's probably going to hold. We'll see. They got a lot of work to do to make it go down. Which, it's the NASDAQ. It only takes 3 minutes to change support to resistance and have a short trade and hit your target. It doesn't take long. My guess is that we're going to run back up and they're going to try this area again somewhere up in here, and then they're going to make their big decision, which is blow through the whole thing or hold resistance. Right now we're in chop, 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 chop. So you can see it coming early, right? I mean, I can see it coming early. You might not yet, but you will. Once you say support ought to hold and resistance might hold at the same time, it's chop. So you can just go take a break. Actually, I'm going to do that. Let's take a 2-minute break. It'll come out of here, I promise. It always does, with multiple divergences from resistance. I would start leaning to the downside breakout. It's still chop until further notice. All right. I'm going to leave you with it, and I'm going to be back in 2 minutes. And Cheetah, you got me before I left. Here, hang on. Let's look. All right, that's just a picture, no question, no trade. I don't know what to do. And just a picture, no question, no trade. I don't know what to do with it. Looks the same as mine. Okay, good enough for me. All right, all right, 2 minute break. I'll be back in a minute. All right, guys, can you hear me? Want to make sure. I rebooted my Ninja just so it could recalculate everything and see what's what. But anyway, we called for chop, and lo and behold, we're a little bit choppy. Um, can you trade in the chop? Sure, you can. I mean, look, if the low fails and you get a pivot stop out and it closes back above and you do a little momentum trade to get up to resistance, I'm okay with that. This one fits the rules for a momentum trade long. And then ultimately, look, we're going to probably test the edge of resistance because they normally do. So strong triggers on the big chart. There's a really good chance we get to the edge. And then I want you guys to tell me in advance the strength of the triggers. And, this is the precursor to breaking out of resistance. It may not, but this is kind of the precursor. So look over here on the left. See how the triggers are really weak and the small triggers are inside and the price bars are below the triggers? That's the precursor for resistance is going to hold. When we get back to that same resistance, right? I had to refresh my market flow chart. That's why it's sticking for half a second. When we get back over here, we can determine in advance that hey, hang on, it's probably going to be a long trade. See how we broke out and again we're holding support. Traditionally, you like to see it close above the triggers. So if support holds and we close above the triggers, then we'll maybe take a long trade, one shot at it. Can we say that support might hold? May not. So we can cancel that. Notice that, look, no close above my triggers, no long trade because I had divergence up here at the top. One of my other rules, which is a very freaking consistent rule, when I use the market flow chart, and I don't mean to confuse anybody who's new, but whenever I have a white paint bar down below these faster 8-3 triggers, the market doesn't ever go up until we close above them. So you see how we got our first close above them right here? So if we were still in a position where we thought the market was going to go up, this would be the spot to go long from. Even though it's not the spot to go long from. It's a precursor look for a bottom. And, again, you'll start getting divergences from the mid bands. And if it breaks through, then the party's over. It'll keep going down. We're not going long with this look, are we? Still 50-50. You guys understand the words when I say 50-50? Look, the large triggers are still above the resistance. This is like warning, 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 warning. Warning to shorts. You may lose due to large triggers above the red fib. You see what I'm saying? I'm not saying that it can't go down. I'm just saying it's not a high probability going down look at all. You see that? Location, location, location is going to keep you from trying to take a short trade that has the wrong configuration. Powerful. Now let's see what happens. So this is where you'd be doing your short trades going, yay, baby, we're going short. We're going to make a bunch of money. And it might. It's just not super high probability yet. This one looks very much like the one that we did this morning, where it tested and then pivot stopped out, and then finally it went. Now we've got a much more reasonable thought that we're going to continue to the downside. Do you guys see what I'm saying? I mean, this is a much more reasonable look saying, hey, we're probably going to go to the downside. Not yet. Maybe a little bit higher. Anyway, there's nothing on God's green earth that says long trades now. It's short trades or nothing. Can you see it? Now that the triggers finally got in here to the party. And again, we might come up a little bit higher and catch this area. And now I would venture to say if we're going to end up going down, you'll start seeing the short trade. And again, it's not an easy short because it's green and going up. So we have to wait a minute. Again, if the area holds and then things roll over, we'll take a short trade. I love the area. So, look, do you see why I love the area? We did this one earlier where this is where you want to be a little bit more assertive. Let's be a little more assertive. Just see what happens. You want to be a little bit more assertive to going short when it's supposed to hold that hard. I may lose just for being aggressive, but anyway, all right. I will stop being aggressive. That was the wrong white paint bar short. I broke my rules. My bad. You guys saw it live. Should have waited to get below here in order to obviously go short, make it easy. It's okay. Watch. The next trades, now look, we're running the risk of breaking out to the upside. Can you see it? All of our triggers are getting above the fibs. Our small triggers are starting to get above the fibs. We got the warning signs. that they're not technically going to be going down anymore. See that? See how the large are starting to roll or pinch and we're above them? So they might mess around in here just a little bit, but they're definitely leaning to the upside. We'll see. It could change in an instant since we're hovering around this fib, but I'd lean to the upside on this one a little bit. See what I'm saying? Again, we'll see how far it goes past this pivot stop out or not. Pretty easy read. I was wrong on my short thoughts over here, being more assertive. I should have did a little better job of that. But if you were inclined to say, hey, I was wrong, we're not going down, we're going up, you can see obviously the reward potential is, you lose a little, make a lot. Lose a little, make a lot. And if you're not okay with losing 3 or 4 times in a row, don't trade the NASDAQ. Because it goes through waves and wiggles where, hang on, this should be our long trade right here, guys. Trend trade long. We'll see if it follows through. 50-50 on a follow through. If it makes a lower divergence, it'll be over. If not, large chart suggests taking it up to the 2020 area. That's an easy look, right, guys? I mean, A1 plus plus look, nothing in the way. Everything's happy, happy. Now look, we're above one-to-ones. We'll see if we can try to take advantage of the rest of it. If we get it. God dang it. A little bit rude, but we'll see if we can go ahead and get it to go now. Nope. God dang it, I'm going to lose again. Need a little up bar so I can have a stop that comes up, and then it's either win or lose at this point. Looks like it's going to lose. I wouldn't be surprised. Yeah, they're just not going to go. They're just being rude. All right, so we will step back and say to ourselves, let's get back to support, and we'll start all over again. Now, can you go short to support? A lot of people say, look, after the long trade fails, you can take a short trade to get to support, or at least the mid band. So again, sometimes you lose and then they give it right back to you. It's what we call the apology trade. What do I think about the gold market? I love it. I don't ever trade it, but I love it. Gold does exactly the same thing that every other market on the planet does. It has support, resistance. When the fibs and triggers hold, it'll be a top or bottom. When the fibs and triggers don't hold, it'll break. You can do the same trades. Make it, but this is the split trigger combination where we have the mid band first and then ultimately this area second. So if you sold the mid band, which is fine, you have to manage out with divergence. And then ultimately, for this to go, basically should go from right here. See if we get to the last fib. I might be pushing it. Look at my big chart. I should be flat, and I'm not. But I can rectify that and get flat. Anyway, it might keep going, but take the money, take the money, take the money. Wait for the next one. Anyway, so let's analyze our big charts together, guys. I love the togetherness of what we got going today. So we have fibs, strength of the triggers. Do they suggest that it's going to hold, or we have no clue yet? Not yet, right? Too strong down to think anything's going to hold. Right, Elvis? So, again, this is where we were looking at a short trade to get to support, which is fine. When we analyze support, there's pretty much no way on God's green earth it's going to hold. It's breaking. Everybody agree? So, again, whenever fibs are going to break, you can pretty much anticipate the market going down. So there's $200. And we'll see if they go down to the next one or not. Everybody cool with this? Man, they're just being stubborn. Need a down bar here real quick. Need a down bar. Nope, not going to do it. All right, divergence from 1 to 1 for me says exit your trade. And you can always take another one if you want, if the conditions are still right. But you really have to have a close below your triggers to make it worthwhile. Hopefully it goes up a little higher. Usually divergence from 1 to 1s will make the market go up to the higher spot. I mean, almost always. Now, when we get to this spot, look at my big chart. Let's analyze it together. Could it hold based on the triggers? Initially, the answer is yes, but it doesn't take long for the NASDAQ to change people's minds. What do you guys think about that divergence from both 1 to 1s? Pretty damn good exit area, huh? Really good exit area. All right, now we're going to go finish what we started the first time, which is to get up to these higher fib levels up here. So we are asking the market to do something for us, which is called come back. Oh, man, they're not coming back. Come on back. Anyway, we wanted them to come back, but they're not doing it. So we have to, look, this is where you have to decide if you're going to do a momentum trade or you're going to wait for a trend trade. Ideally, we'd like to see a little bit of a trend trade. With the up bar, you pretty much just have to go. There's just not much you can do about it. Everybody okay with that? I mean, it's just up and we got to go, and then that's it. Again, once you get up $200 or $300, you don't really have to lose any money. So that's 275 on the first one. And as long as I don't make divergence from a pivot stop out, I'll hang on and see if I get a little more. All right, that's pretty much up into the mother lode right there. So that's $500 on the second half. Anyway, another really good example of lose a little, make a lot. Fun stuff? That's not so scary, is it? Just wait for everything to be going your way and buy a pullback. That's not that scary. All right, Ron C., I know what this is. Ooh, double dipping. A double chili dog. So you did a 4 lot on crude oil twice. So you made $440 twice. So that's $880 in 2 simple, easy momentum moves. Yeah, that's chili dog with cheese and onions. And like my brother, I said, why the hell don't you just wait for the red fib to get out and get those extra 6 or 7 ticks? And anyway, I know why. I've been trained on why, but that's your plan, and you follow it, and you do it over and over and over and over and over and over and over. Do you ever have a losing day, Ron? I'm just curious. When's the last time you had a losing day? It would seem to me you'd have very few losing days waiting for that much momentum all the time. That much momentum and a clear path is usually a winning combination. Been a couple weeks since you had a losing day? Cool. So, look, you guys have to figure out for yourself, what style of trade suits your eye the best. Is it the trend trade on the S&P and crude oil? Is it a momentum style trade? Is it market flow based trades, which, again, I've given you guys my market flow trading plan, which I think is awesome. Toot, toot, toot my own horn on that one. But anyway, right now we're still going up. Everybody agree? The lean is to the upside until something changes. Now, it's not as easy of a long because we've got resistance on the little charts and divergences and all that stuff. So if you go long, it's one of those ones that, you're expecting it to go up, but there's not a lot of room to play with. So if it doesn't just rocket out of there, it's probably a break even. I'm doing this because of the large chart, but I'm not willing to mess around and lose a lot of money. Anytime you get pivot stop outs with weak triggers, it can go way down really fast. So anyway, if it kept going from here, I was fine. I'll stay in until we get up to 42, but break even is an okay trade with me all day long. All right, so now that it's weak and we've had multiple divergences, chances are they take out the low, which they just technically did. They took out the low by a tick, and if they're really going to go up, this is going to be it. They'll go up from here. I know you can't see it yet, but if you only look at your large chart, is there any reason to think we're going down yet? The answer is not yet. Now, it's not necessarily a long trade because it sucks for longs. This is not the right look for longs, of course, but it's worst case, don't go short until things clear out. And then once they clear out, you're going to get an opportunity. But remember the warning pick I gave you guys last time? This one's even more horrifically warning you that you're going to be screwed if you go short. Can you see the warning? Look at where the large triggers are. It's like F you 9 ways to Sunday. We came down here to get sucker everybody to go short, but we're not going short. I mean, they might, but I bet you $50 they go up. And they're going to go up to here. They're going to go up to here, and then they're going to go up higher. They'll probably get to 45. You see how they try to trick you into thinking that the market might go down because of, this is what I would imagine. I'd imagine that we're going up. That's probably a bad trade. Hang on. let me undo that real quick. I did that based on my market flow chart, high volume area. We'll see if it actually comes to pass or not. It's pretty crappy. It's not a great look. If I lose, I lose $150, which I might. And if I win, I make $700. So I'm risking $150 for $700 if my analysis is correct. And the reason I did the trade in the first place is because my market flow chart agreed with it. Now, we got to break above 25 to get a big run, but we probably will based on the bigger chart. So this is what we're looking at on the market flow chart. So can you see the reason why I did it? Both triggers up, high volume area. Large chart says we're going up, so I believe it. I'm willing to lose a couple bucks if it doesn't go. Anyway, and this is where I use my market flow chart for management too. So again, if I get a bar down and then a bar up, which, yeah, rude. All right. Anyway, an assertive entry into some areas that I was, you have two choices. You can get in and manage your trade a little tighter if they don't break, or you can get in and, or wait for this area to break. The unfortunate thing is sometimes if you wait for an area to break on the NASDAQ, you don't actually get a trade, which is still okay. Not trading. I use this as my, let's go early and let's go fast. And this is, the type of white paint bar with the small triggers up that usually will start that party again. So I wouldn't be going short. And I already said I'm not going short because, let me clean this mess up. I'm not going short because the large triggers are physically above my fibs, as are my small triggers. Which it's just a matter of time before they go up. They can keep dicking around with everybody all they want, but eventually, probably not going down. It looks down on your little chart, doesn't it? We'll see. Now, they can go down, and I don't care if they go down. It makes no difference to me whatsoever. They can come down to here, and I'll be okay with it. Get back to the mid band, and then we can finish the rest of the party to the upside. If there is going to be a party to the upside, we'll see. My guess is there will be a party, and it will be going up. But, and again, that's why I didn't really want to go short. Maybe I might have been tempted, if you guys weren't watching, to take one short here because of my market flow chart. Anybody that has the market flow chart, you know why. You can see it. I won't go into it too much, but that's your target. Dual 1-to-1s at the mid band. Party's over. Down party's over. Do I say things very matter of factly? I mean, it's so clear and easy and obvious. And again, I take chances. Maybe that's bad. Maybe that's good. I don't know. But, again, I don't mind taking a little early entry with the expectation that I'm going to be first. And, sometimes you get your butt kicked for that. So, anyway, they're doing now what they were supposed to do, which is to break out and go to the upside and finish the up move, which is not surprising. I've been calling for it. They just wanted to do it from a, I always say they wanted to get a running head start at going up. If they're not going to do it at the first spot where they might go up, which was over here, then they get a running head start and then they go up. And again, there's not an easy trade in here. It did what it said it was going to do, and sometimes you can see it and you don't get paid for it. It's okay. That's NASDAQ trading. Should get one more push to the upside to get us up to the 55 area, right? So you guys want to try a trend trade from the mid band and just get in assertive? Nope. No assertiveness. Oh, they change their minds super fast. All right, now we have to recalibrate and go step back and say, what the hell happened? All right. They didn't quite make it to the target. They said they were going to. They lied. It's okay. They do lie sometimes. This should have bounced us up and got us the rest of our money. Anyway. We've got this resistance area right here suggests that it's going to hold. Right? We've got large triggers rolling below resistance, which is a good thing. We've got wide triggers. So again, if we get some type of pullback, there's a potential that we continue to the downside now. Can I show you the flow chart? Sure, if you want. There you go. So it said up from over here. This was probably the second chance at going long. I didn't take it. And then once we put in divergence and again, this is the spot where you usually will get the bounce to finish the rest of the move. It doesn't happen. And then we closed below the 8-3 triggers and we stayed below them and basically down ever since. So, and we're still going down. No reason to think, like we said, it's time to take shorts based on this chart. And when this chart agrees, usually you get a good trade. Again, it puts you back into a 50-50 situation. 50% of the triggers are above, 50 are below. There's only one thing that answers the 50-50 question, which is did you have divergence on the low or not? And if you had divergence on the low, you're not getting in at a spot because you'll get run over. So probably going to make it up to 37 or up a little bit higher. I mean, this is a good spot to go down from still. If it's going to go, we'll see. I'm not overly excited about it going down at the moment. They'll make a decision somewhere around here whether or not they want to keep going up or down. You see what I'm saying? I don't have to make that decision. They'll make it. So looking at my market flow chart, it suggests to me, and again, look, one of my rules is don't try to trade on the wrong side. Whenever I get a white paint bar that's on the other side of these 8-3 triggers, don't go short until we close below them or it's more favorable. It just doesn't work. So again, market flow chart support holds, bullish, 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 one down, still going up. So again, we're in a recalibrate mode because of, short version is this is 50-50 with divergence. So there's no reason to think shorts anymore after that. It doesn't work. And then, add the market flow chart to it, and as long as you're above these 8-3 triggers, the fast ones, it's not going down. So pretty easy once you put it all together. You hear the beach calling? Yeah. I'm afraid to go to the beach and get sepsis, man. There's, from Tropical Storm Debbie, our water got so muddy and dirty, and one of the freaking treatment facilities broke and went out in the bay, so there was crap out in the water, literally, not figuratively. And they said, don't swim if you have a cut, or you will get deathly sick. It could kill you. So now all of a sudden, after another freaking hurricane, the water was almost clear again. I mean, just right back to almost perfect. And everything had settled down and gotten out, and then we had this freaking hurricane. So now the water looks like chocolate milk again. So I will be golfing at 1:30 in lieu of doing any boating or beaching. So this is my first golf game in like 4 or 5 months since my back blew out. So hopefully, fingers crossed, everything stays together. I did the driving range yesterday and had no ill effects, so that's a really good start. Okay. We have fibs, yes. Trigger line condition. Location says the fib might hold. The strength says not quite so sure. So it's kind of a 50-50 on if it holds or not here. We'll see. If you look at the market flow chart, it's leaning heavily towards holding. So we had a high volume area there. We have divergence there. We have an outer band there. We have sell signals there. We have white paint bars that close below there. There's a whole bunch of stuff that says we're going down. Just on the market flow chart. The problem is, where are you going down into? Into support with up triggers? Sounds like financial suicide to me. So this is where the market flow chart will screw you up and make you do stuff you shouldn't be doing, which I've done a couple times today. If you don't have all three charts and you're not taking everything into account, you end up, doing the wrong thing. So anyway, no shorts with strong triggers up. Wait. Because look, we might go get a pivot stop out at the high. We get to 20,055. That's going to be a hell of a line in the sand right there. I don't know if it's going to hold, but if we get here and the triggers start to weaken, then we'll maybe be able to play party time. Or vice versa, if we end up making a second divergence from this fib, which I don't know if we will, but that would put us down here. All right, that would put us down here first to even make this divergence come true. So we got a long way to go before we have easy trades. And you know what? I'm okay with that. So what stopped the bottom? Divergence from one-to-ones. Could it be true that divergence from one-to-ones would also stop us at the top? Crazier things. What do you think? Anyway, you can just kind of see that that's an additional termination condition on a little chart that says don't go long. Pretty clear. All right. I think we're stuck. I think that may be it. I'm going to end the class recording so you guys can have a copy of the video if you want to go back and watch it. I think this was a stellar freaking day as far as chart reading goes and whether fibs are going to hold or break and why. So again, this is going to be a real good video for you guys to review if you're a new user. I appreciate